Okay, so you've given us some really interesting material this time. We're looking at a transcript from the Connected Minds podcast, the one featuring Benjamin Acima.
That's right.
And our mission, really, for this deep dive is to pull out the most important insights. We want to help you, the listener, understand investment opportunities in Ghana.
Yeah, whether you're actually in Ghana or part of the diaspora looking back home.
Exactly.
Yeah.
Because a key question that came up in the source material was really about planning for that long-term financial security, wasn't it?
Absolutely.
Yeah.
Especially thinking about pensions, retirement, what investment options are really out there for Ghanaians wherever they are.
Right. So that's what we're going to tackle. We'll get into, where you might put savings, understand things like stocks, treasury bills.
And crucially, that advice for diasporans looking to invest back in Ghana.
Okay, let's dive right in then. That core listener question. Where to invest savings, maybe if you're nearing retirement or, health is becoming a factor.
Well, one of the first things Benjamin Acima really stressed was how important age and your time horizon are. How long until you actually need that money?
Makes sense. If you're younger, you've got more time to ride out market fluctuations, presumably.
Exactly. Which leads nicely into this idea of compound investing.
Ah, yes. He explained that really well. It's not just earning interest on your initial money, but then earning interest on the interest. It builds up.
Precisely. And he gave a great example. Say, you put 100,000 Ghana cedis in a 3-month treasury bill.
Okay.
Then you reinvest the whole amount, the original 100K plus the interest. And then maybe you add, say, 1,000 cedis extra each month from your savings.
Right. You keep adding to it.
Over the long run, that compounding effect can be, well, pretty significant.
So for someone maybe a bit older or with those health concerns we mentioned, how does that apply?
Benjamin suggested looking at things that still offer that compounding but maybe give you easier access to your cash if you need it. He pointed specifically to mutual funds and money market funds.
Did he name any specific ones?
He did, yeah. He mentioned the IC Liquidity Fund and Stanbic Cash Trust.
Okay. And the key thing there is liquidity, right?
Exactly. He explained they invest in things like treasury bills, government bonds, assets that are generally easier to sell quickly, so your money isn't typically locked away for ages.
That's good to know. And how easy is it to actually invest in these?
Apparently quite easy these days. Benjamin highlighted you can often do it directly from your phone.
Oh, wow. Like online registration?
Yeah, online registration, setting up direct debits from your bank account, that sort of thing.
Okay. But is that it? You just sign up online?
Well, interestingly, he mentioned that after you register online, the investment firm will probably give you a call.
Oh, okay. Why is that?
It's actually quite important. They want to understand your risk tolerance, what your financial goals actually are.
Right, to make sure it's a good fit for you, not just selling you a product.
Precisely. It's about suitability.
Okay, that makes sense. Now let's shift gears a bit. A big one for many listeners I know is investing from the diaspora.
Yes, definitely a common question. Benjamin tackled this, talking specifically about Ghana Treasury bills first.
Right, T-bills. How do they work again?
Essentially, you're lending money to the government to fund its projects. And the interesting point he made was that historically, the returns have often been higher than Ghana's inflation rate.
Okay, that's a key benchmark. What were the numbers he mentioned?
He said inflation was around 23, 24% at the time, but T-bill rates were up near 28%.
So on paper, your money's actually growing faster than prices are rising.
On paper, yes. But then he immediately brought up the big challenge for diasporans.
Let me guess the exchange rate.
You got it. Currency risk.
Hmm.
You convert your dollars or pounds or euros into cedis to invest.
And then when you want your money back, the CD might have weakened against your home currency.
Exactly. So the fluctuation can eat into your returns or even cause a loss in your original currency terms. It's a real concern.
So is there a way around that for diasporans?
Well, he did introduce an alternative, government bonds that are actually denominated in U.S. dollars. Euro bonds, they're often called.
Oh, okay. Dollar bonds, how do they help?
Because the investment itself is in dollars. As Benjamin explained, the dollars invested go into Ghana's U.S. dollar reserves, which are important for, stabilizing the cedi and handling international trade.
So your investment stays in dollars, avoiding that CD fluctuation risk.
Pretty much. He even mentioned Michael Blackson investing in a euro bond as an example. So it's an option for diasporans wanting Ghanaian exposure without direct cedi risk.
Interesting. Okay, so that covers T-bills and dollar bonds.
Yeah.
What about the local stock market, the Ghana Stock Exchange? How does someone get involved there?
First step, according to Benjamin, you need a broker.
A broker. Okay. Any recommendations from him?
He mentioned the two he uses, IC Securities and Black Star Group. He noted IC Securities has a fully working app, IC Wealth.
And a black star.
Their app wasn't quite ready when he recorded, but you could still invest through them using other methods.
Right, so you pick a broker. What's next?
The next crucial piece is setting up a central securities depository account, a CSD account.
CSD account. What is that exactly?
Benjamin described it as like a secure digital place where your ownership of investments, stocks, T-bills, bonds is officially recorded. It's overseen by the Bank of Ghana.
So it's the official record keeper.
Yeah, think of it like that. A central registry.
And is getting one quick?
Maybe not that quick. Benjamin warned it can take a bit of time. He mentioned hearing anything from 2 months up to maybe even 5 months.
Okay. Good to manage expectations there. It's a process.
It is, and there are regulatory bodies involved too. You've got the Ghana Stock Exchange itself, linked to the CSD, then the Securities and Exchange Commission, the SEC, and the Bank of Ghana overseeing it all.
Sounds complicated.
It can seem that way, but the good news is your broker handles most of that complexity for you. That's their job.
Right. Okay, so broker chosen, CSD account eventually set up. How do you actually buy the stocks?
Through apps, mainly. He specifically mentioned the IC Wealth app again. You can see the list of companies over 30, he said.
And you see the prices.
Yep, current trading prices. He gave MTN as an example, trading around 2.75 Ghana cedis per share then.
2.75 cedis. That sounds quite low compared to international stocks.
It often is. He made that comparison mentioning Tesla might be around $400 a share. It shows the difference in scale.
And highlights that the entry point for some Ghanaian stocks can be quite accessible cost-wise.
Definitely. He also mentioned MTN's size on the Ghana Stock Exchange market cap, over 36 billion cedis. It's a major player.
But what about growth? Is the potential the same as, say, the U.S. market?
That's a critical point. Benjamin was clear. Generally, the growth on the Ghanaian market is more gradual, slower than somewhere like the U.S.
Why is that?
Various factors, he suggested. Things like overall investor confidence, the size of the economy, but he did say interest is growing.
Okay. So slower growth potential generally, but are there specific opportunities?
He used MTN again as an example of long-term potential, pointing to their huge expansion into mobile money.
Ah, Momo. Yeah, that's massive.
Massive. He quoted something like 3 trillion Ghana cedis in loan transactions just from 2023 to December 2024 in that sector alone.
Wow.
So his point was, if you hold shares in a company like that for, say, 5 or 10 years, the potential for the price to increase significantly could be there.
So it's more of a long-term game, perhaps.
Often, yes. But, and this was a big but from him, you absolutely must do your own research.
Right. Don't just jump in.
No.
Yeah.
Understand the company, its potential, its track record. Where has its price been before? Where is it now? It's that classic advice. Buy low, sell high, if you can.
And he was careful to say this isn't financial advice, right?
Very clear on that. Purely informational. Always do your own homework. Maybe talk to a qualified advisor.
Good disclaimer. Okay, what about the other way around? People in Ghana wanting to invest internationally, like in the U.S. market.
He had a specific recommendation for that, too. The Bamboo app.
Bamboo. Okay. And that lets you buy U.S. stocks from Ghana.
Yep. He described it as pretty user-friendly.
How easy is it to set up?
Sounds straightforward. Need your ID card. Go through registration. Might take up to 48 hours, he thought.
Okay. Anything tricky about trading internationally like that?
One really practical thing he highlighted was market hours. They're different.
Yeah. Time zones.
Exactly. He gave the New York Stock Exchange times roughly 2:30 p.m. to 9:00 p.m. Ghana time, and London about 8:00 p.m. Ghana time.
So if you try and buy a U.S. stock at lunchtime in Ghana,
it probably won't execute immediately because the market's closed. Your order might just sit there until it opens.
but can you still place the order?
Oh, yeah. He clarified that most apps let you place orders anytime. They just get executed automatically when the market opens.
But the price might have changed by then.
That's the catch. The opening price could be different from what you expected when you placed the order hours before. Something to be aware of.
Definitely. Okay, this brings us to something fundamental Benjamin really hammered home. Diversification.
Yes. Cannot stress that enough. Don't put all your eggs in one basket.
He used a specific cautionary example, didn't he?
He did men's gold. A painful reminder for many, unfortunately, of what can happen when investments aren't spread out and something goes wrong. Huge losses.
So the advice is simple.
Spread it out, mix it up, treasury bills, maybe some mutual funds, perhaps real estate if you can. fixed deposits, stocks, both local and international if possible,
A bit of everything.
a balanced portfolio. And he made another crucial point. Every investment has some risk.
Even T-bills. They seem pretty safe.
Relatively safe, yes, but not zero risk. Economic conditions can change, governments can face challenges. Diversification is your main shield against the unexpected.
Right. Now let's clarify saving versus investing. People sometimes use them interchangeably.
Good point. Benjamin drew a clear line. Savings accounts in a bank, essential for emergencies, short-term goals.
But for long-term growth.
That's where investing comes in. He pointed out that money just sitting in a standard savings account often loses value over time because of inflation. Its purchasing power goes down.
So what's better than a basic savings account if you want some return but maybe aren't ready for stocks yet?
He circled back to those money market funds, even the ones offered by banks. They often give better returns than standard savings.
What kind of returns did he mention?
He talked about average ranges, maybe 15% to 22% annual returns for money market funds. And he shared his own experience with the IC Liquidity Fund yielding around 21.6% at the time.
That's way better than a typical savings account.
Significantly better, yeah. Still relatively low risk compared to stocks, but beating inflation.
He also briefly mentioned international options for diasporans again.
Just quickly, yeah. An example like HSBC's Global Investment Account, which might have different risk levels or tiers. Just another avenue to potentially explore if you're based abroad.
Got it. And just to be clear, when you buy stocks, what does that actually mean?
Benjamin clarified you become a part owner of the company.
Really? Even with just a few shares?
Technically, yes. A very, very small part owner, but an owner nonetheless. You might even be entitled to attend shareholder meetings, though you'd likely need a lot of shares to have any real sway.
Still, it's a different mindset than just lending money like with a bond.
Exactly. Ownership versus lending.
For listeners wanting to learn more, did he suggest any further reading?
He did. 2 classics by Robert Kiyosaki, Cash Flow Quadrant and Rich Dad Poor Dad.
Yeah, heard of those.
And he mentioned he was currently reading The Psychology of Money, which looks at the behavioral side of things.
Interesting. That connects to mindset, doesn't it? He talked about discipline versus motivation.
Big time. He really emphasized discipline. Motivation comes and goes, he argued, but discipline, sticking to your financial plan consistently, that's what drives long-term growth.
Makes sense. It's not always exciting, but it's necessary.
Especially for long-term goals like retirement.
And finally, he had a strong message for young people, didn't he? About why understanding this stuff early is so important.
Yes, very passionate about that. He sort of challenged the traditional reliance on children for support in old age.
Saying you need to plan for yourself.
Absolutely. Start planning for your own financial future well before retirement in your 40s, 50s, ideally. Don't wait.
Because just saving isn't enough.
Right. Inflation erodes savings over time, as we said. You need that money to be working for you, growing through investment.
Did he share his own strategy?
A bit, yeah. Reinvesting earnings from his different ventures, YouTube, businesses, into a diversified portfolio. And he mentioned plans to look into real estate, too.
So practicing what he preaches.
Seems so. And he wrapped up with that quote,
For the lack of knowledge, my people perish.
That's the one. Really stressing the need to seek out financial understanding.
Definitely a powerful thought to end on from his perspective.
Absolutely. And hopefully this whole deep dive, drawing on those insights, has been useful for you, our listener.
Yeah, we really wanted to tailor this to your interest in Ghana's investment scene, pulling directly from the source material you provided.
We hope it's given you some valuable clarity.
So as we wrap up, maybe here's a final thought for you to chew on. We've talked about quite a few different things. T-bills, money market funds, local stocks, international stocks, even those dollar bonds.
Whole range.
Which one of those resonates most with your situation right now? Thinking about your own finances, your long-term goals, which one feels like it might be the best fit, or at least worth looking into more?
And maybe, just maybe, what's the very first small concrete step you could take this week to start exploring that specific option further? Just one small step.
Keep that learning journey going. And definitely let us know if other questions pop up or if you make some progress. We'd love to hear about it.